Hello, everyone, and thank you for joining us for BAASS Connect Virtual. In this session, we want to talk managing your cash flow. My name's Nancy Lavery. We'll also be hearing from Rob Lavery in a little bit as well. You know, as they say, cash is king. So managing your cash requires an understanding of what impacts your inflows and outflows so you can properly forecast your needs. It's particularly important for organizations that are managing deferrals or prepaid expenses, or for organizations that purchase a lot of fixed assets. So in this session, we want to show you some products that will help you to reduce the time it takes to manage your cash flow. You know, cash management is a critical aspect of operating any business. You know, one might venture to say it's the most important part of running a successful business. Why is it so important to manage your cash flow? Without cash flow, your business can't survive. This is even more prevalent today. Due to COVID-19, businesses today are more aware than ever just how important cash flow is and how important it is to know where you stand from a cash flow perspective. You need to be able to forecast future expenses and ensure you have enough revenue to cover those expenses. You need to have quick and flexible access to your cash flow trends and ensure you have all the information available to make informed decisions and adjust when necessary to make sure you don't end up in a negative cash flow position where you have problems paying your vendors. It's imperative to monitor your cash flow and maintain healthy cash flows at all times. So in this session, we want to talk about managing your cash and ways to improve that in Sage 300. We obviously can't stress enough the importance of managing your cash flow. We all know that. However, we also know that some cash management is reliant upon Excel. So how many of you are tracking your prepaid expenses or your deferred revenue in Excel? How many of you are tracking your cash flow in Excel? And how many of you are tracking your fixed assets in Excel? What if we told you there are products that can help you to manage these important aspects of your business inside Sage 300? Allow you to utilize the information you have at your fingertips to be more aware of your cash flow situations in your business. So revenue and expense deferrals gives you the ability to enter a transaction in Sage 300 as you currently are now, but you can identify that transaction as a deferral transaction. So whether that's a revenue deferral or you're setting up a prepaid expense, set up a schedule to recognize portions of that entry based on how you define it, automatically post those recognitions when they're due, and give you the ability to report on these entries. Wouldn't that make life easier than tracking it in Excel? With the cash flow forecasting module, you have access to your data that is already in Sage 300, and it provides you with a window, what we call a management console, that gives you a bird's eye view of your cash flow and where you may have potential pitfalls that need to be addressed. You can take into account all of your entries in Sage 300, things like your AP and AR invoices or your OE and PO orders, your GL account budgets, but you can also take into account future business that may not be entered in Sage 300 yet. You can create what we call a new business entry, whether that's from the revenue side, you know some revenue is coming in, or you have some expenses that are coming up that haven't been booked in Sage 300 yet. You can view those through the management console and see a running total of where you sit in your bank account. You can also take into account things like your overdraft limit, so that you at all times, at a bird's eye glance, be able to see exactly where your bank account is sitting from a cash flow perspective. We can highlight entries for you so you can easily identify where you may be exceeding your overdraft limit. And it gives you the flexibility in a live console to adjust due dates and that sort of thing to ensure that you will not reach that overdraft limit and you can maintain your cash flow and pay your vendors when you need to. Rob's going to talk to you a little bit about fixed assets. So at this point, I will pass it over to Rob.
Thanks, Nancy. So now let's take a look at asset management. This is one area where your cash flows can be impacted tremendously if you're not properly recording and tracking your fixed assets, especially for organizations that have a large number of fixed assets in multiple locations. The asset management solution from Norming Software encompasses an asset accounting module, which becomes your fixed asset subledger, but also you can optionally manage your assets by tracking your maintenance costs, so you have a clearer understanding of how much it's costing you to keep your assets in productive service. Likewise, if you lease assets, either leasing from an outside vendor for assets that you want to use internally within your organization, or the assets that you own are rented out to customers on a rental or contractual basis. Obviously, these types of contracts are going to have a major impact on your cash flow. And then lastly, an asset tracking module, which helps us monitor the location and the condition of our fixed assets, regardless of where they're located. When we look at the asset accounting module, the asset register is really the key aspect of the accounting subledger. The asset register keeps information about the physical location of that asset. And obviously we need to know where our assets are located to ensure that we've got a test of completeness through an asset listing report that is part of the asset accounting module. The asset listing report allows us to run a standard crystal report from within the asset accounting module that we can sort by location and possibly then by category or other criteria such as cost center, group code, or account set. So if we chose category and we want to run this report as of a certain date within the system, this gives us a breakdown that allows us to see the precise location and how we've categorized the assets within that location to give us a sense of where our assets are located and what their current status is. By status, a normal status means that it's in service and properly operational. There may be other assets that are impaired, and we're tracking that information either for replacement purposes or because we need to manage our financial statements under the IFRS, or International Financial Reporting Standards. It may be that some of the assets are in the process of recording depreciation, because even though depreciation is a non-cash expense, it has an impact on our income statement, and we need to understand whether our assets are getting close to fully being depreciated. Likewise, we can capitalize expenses to the asset accounts on our balance sheet, what we call work in process or assets under construction. And as our assets are defined as future cash flows, it's important to recognize that assets under construction represent future cash flows reflected in their value as an asset on the balance sheet. So all of these status codes, when we run the reports, are important to see the current status, the current location, and the current value of the asset. So on the asset listing, we keep track of its book value, its year-to-date depreciation, its accumulated depreciation from the date of acquisition, any impairments, and its current net book value. We also store a salvage value against these assets because that's the point at which, by definition, we stop taking depreciation. And it's important for you to understand the salvage value of the asset because that represents a potential future cash flow within the business. The other main report within the asset accounting module is the asset schedule. Here again, we're looking at statutory reporting requirements. When we run this report in detail versus summary, and again, we can group by category, cost center, location, group code, and account set. This report will highlight for us the roll forward information from last year to this year, or from the previous period to the current period, so we have an understanding of what activities are impacting the valuation and therefore future cash flows surrounding our assets. So this report shows an opening cost balance for your assets. This is typically what the outside accountants look for when they come in to do an audit or review of your business. They will tie the opening cost into last year's closing cost and then review the roll forward information through any additions, any adjustments, any disposals, any merging and splitting of assets where we're combining or decoupling assets to come to a final closing cost. And then the roll forward on depreciation from the opening balance through the year to date, any disposals, merge, split, and closing accumulated depreciation, which then gives us our final closing net book value. And so having the ability to generate these reports quickly and easily not only helps us with our internal management reporting and tracking of assets, it also allows us to meet the statutory requirements for our accounting review engagements or audits. The other aspect of the asset register that I wanted to cover was also the fact that we need to identify whether the assets are properly insured. This is often an overlooked area within the accounting world with fixed assets, because we think of book values, net book values, maybe tax values, but we sometimes omit to review the insurance values to make sure that our assets, especially the key assets, are properly insured to cover any potential replacement costs. You can imagine the surprise a controller might find in her books if she recognizes that an asset has been damaged or is lost, or something goes wrong and they need to replace that asset. If they do not have sufficient insurance coverage, then that can have an obvious negative impact on our future cash flow, because we're going to be making a capital expenditure that wasn't part of our budget for this particular year. Having said that, there are capitalization budget capabilities within the norming fixed assets module. So if you choose to create an asset budget code, it could be representative of an entire fiscal year or a specific division or department within your organization. We can keep track of a capital budget and our actual expenditures against that budget and show a variance. And this then is supported through a detailed report in the asset accounting module that gives us an indication of the assets that we've been acquiring against budget on a departmental level. And again, this just gives us a nice overview summarizing our capital expenditures against budget so that we can see the impact that these expenditures are having on our cash flow, and listing the assets that we've been acquiring, subtotaling by department, and then at the end showing us the balance of those acquisitions against our budget. And as you create new budgets for new fiscal years, you can see that we have a building project here in 2021. We've already started to accrue expenses for the new building of $150,000 against a budget of $500,000. And we show you the balance of the budget for that new building. So having the ability to get this information quickly and easily supports the audit process, but also helps us manage our cash flow on a more effective basis. And all of this information is tied in with the asset register, and whether we've chosen to track original purchase cost, any adjustments to the book value, any impairments, our accumulated depreciation, net book values, and then ultimately a salvage value. And in addition to the insurance value, I don't know if you noticed the responsible person. We track information about the fixed assets and include information about stewardship by assigning individuals who are responsible for the care and maintenance of those assets. And in addition to that, We keep attachments that might be pictures or images of these assets, as well as documentation about their original cost, inspection, or duty. Now, speaking of inspection, we have maintenance. Maintenance is an important aspect in our cash flow because we need to understand, based on a maintenance schedule, what kinds of maintenance expenses are we likely to incur to keep our assets in productive service. So as we've created assets within the asset register for accounting purposes, we can then create a maintenance profile against those assets to keep track of important statistics, like how much have we spent year to date and life to date on a particular asset, and what kinds of maintenance expenses are we incurring for this kind of asset. We can track GL type expenses, AP expenses for work that's done by an outside vendor, or if we consume spare parts inventory, are we counting the cost of what it's costing us to consume those spare parts? And as part of the system, we have a metering capability that will track the capacity of the asset, assuming 100%. And then from there, we can track based on a schedule, maintenance code, or based on usage criteria. So in this case, as a vehicle, we're tracking the kilometers as a metered calculation. And every 5,000 kilometers, we configure the system to consume parts and labor that are going to be necessary, such as replacement bulbs, maybe some tires for the truck, an oil filter, an oil change, and internal mechanic labor. And all of these are costs that can be tracked in the system, generate accounting entries for either issuing IC stock, creating AP invoices, or tracking GL expenses. And then as we create these entries in maintenance, we're calculating an average reading, average usage per day, what the last reading was, and then accumulating that information against our total asset. So while we started with a profile assuming $150,000 kilometers, we know that ultimately we're going to be consuming that asset, and right now 86% of the asset's remaining capacity is left over, which is represented by 129,000 kilometers. So having this information at your disposal is going to allow you to keep your eye on the usage of the asset, how quickly we're consuming it, and what it's costing us every time we do these meter readings, keeping statistics about the total cost of the asset, as we showed at the very beginning of this section of the presentation. So maintenance is another important aspect in managing cash flows within the business. And you can create a maintenance schedule and generate reports on maintenance history, what it's been costing you, and the maintenance order action as to what anticipated future maintenance is going to be expected within the system. And then finally, in terms of leasing, we have both lease in and lease out contracts. Lease in is where I'm leasing assets into the business from an outside vendor, or lease out where I'm renting my assets out to a customer. In this case, as we create the lease billing contracts within the system, we'll have the details about the asset that we're leasing. In this case, it's a lease in. So we're renting a building, and we can do a straight operating lease, which is a flat billing amount, which is an expense that we accrue on the balance sheet and charge as an expense on a regular monthly basis. That's one type of lease. There are other lease types where on the billing schedule that's created, it'll be a combination of principal and interest. And in this case, you can see how the principal is increasing while the interest cost is decreasing. So a traditional finance or capital lease, where I'm financing the acquisition of an asset through a lease contract, which again has implications for my cash flow. So being able to see a billing schedule that's part of my lease accounting system within Sage 300 is going to give me better visibility into my future cash flow needs in order to fulfill my financial requirements for any leased assets that we're using. And again, we have multiple reports that help us keep track of the lease contract information and the lease billing batches that are created within the system. So I hope this has given you a nice overview of the impact that fixed asset accounting has on our cash flows, both cash that we're going to be expending for our maintenance expenses or leased assets, or potentially revenue that we're generating off assets that we're leasing out to customers and creating rental or interest income from. And finally, the review of the asset register, where we're keeping track of all the activities in terms of location, condition, and other important aspects of the system. So I'll close with just a quick review of the asset tracking module, which is where we can assign assets to individual employees and track the return of those assets. But this is also where we can use handheld scanners to record the current condition of our assets. Is it missing? Is it still in a normal status in service? Or is it damaged? And we have a booked location and then a scanned location. And where those location changes, then we update the information within the asset register by uploading it from the handheld information into the asset register. So using any one of these components of the asset accounting module will allow us to manage and maintain the cash flow impacts of our fixed assets within Sage 300. And now I'll pass it back to Nancy.
Thanks very much, Rob. So we want to thank you for taking the time with us today to review managing your cash flow. Hopefully we've given you some ideas on how you can improve upon that within Sage 300. So if you have any questions about any of the products we've talked about today, you can put those into the chat window now, or you can contact your local BAASS representative and they can get answers for you. We want to thank you for spending the time with us today and let you know that these presentations will be available on the BAASS Connect website after the conference is over. So thanks very much for your time today, and we hope you have a great day.